when you have open source, Bitcoin base layer, Lightning, whatever other layers could exist, any entity that starts interfacing with those systems now starts interfacing with every other kind of environments, money ecosystem in the world that is also tied into that system. And so, for example, Cash App has got a very large, set of users, and by incorporating into the Bitcoin and Lightning Network, they start connecting to, other ecosystems around the world without even necessarily knowing it. Now, there still can be frictions on that in terms of like KYC, AML, and kind of these artificial restrictions that start go on top of that. But the point is, I think that basically having these open source layers that can connect different monetary ecosystems together and bypass their artificial kind of firewalls.
Robert Kiyosaki, the author of the personal finance book Rich Dad Poor Dad, has reiterated his support for assets like Bitcoin, gold, and silver as inflation threatens to worsen living standards globally. The price of gold recently crossed $2,000 per ounce, marking a steady recovery amid the weakening value of fiat currencies. As a strong supporter of the Bitcoin ecosystem, Kiyosaki recommended his over 2.4 million followers on X, formerly Twitter, to reduce their exposure to fiat currencies, which he called the fake money system. Another strong supporter of Bitcoin, Lyn Alden, discusses Bitcoin's role in inflation and value transfer. According to her, Bitcoin remains the first credible method for transferring value across long distances without relying on traditional credit systems. She also comments that Bitcoin could potentially correct distortions in the global economy caused by the over-monetization of assets like real estate and stocks. Let us now get into the video. And remember, don't hesitate to hit the like button, subscribe, and drop your comments below.
Bitcoin kind of solves these last two problems, which is it's the first credible way to send value long distances without relying on credit. All you're relying on is the ongoing functioning of a decentralized network. So all you're relying on is there not being a 51% attack to reverse your transaction, which is different than credit. So you're sending a largely irreversible bare asset to someone at roughly the speed of light, especially if you're using something like the Lightning Network. But even if you're using the base layer, it's half an hour for a reasonably settled transaction. And also you have infinite value density. So for example, unlike an airport, with an airport with cash or gold, with Bitcoin, you could memorize 12 words and bring $1 billion through an airport if you had it, right? There's just infinite value density that can go in or out of countries.
It's so beautiful.
Yeah. It breaks that whole thing wide open. And then secondly, if I want to pay a videographer in Egypt, he can send me a QR code or a string of numbers, and I can pay him in whatever he wants. It could be Bitcoin, it could be dollar stable coins, whatever he wants.
With reasonable privacy. Yeah.
Yeah, with reasonable privacy, and it depends, and there's ways to improve that over time. But, he can get some degree of just direct to him that goes around his local banking system. The same thing is true, like if there's a Norwegian graphic designer and she charges whatever she wants. She's okay, I want stable coins, I want Bitcoins. And instead of going through like their local official exchange rate, it can go at the real kind of the street exchange rate. Like it can get directly to her, and then she can either, in some cases, depending on where she is, just spend that directly. She could spend with Bitcoin or spend with stable coins. Or if she does convert to the local currency, she's now basically converting on the street rate, which is better for her to get back into the local currency. And so these kind of 160 different currency bubbles every one of them has their gates down now. They're all starting to get cracked open. And of course, this takes time because only in the past 5 years has any of this been liquid, right? So stable coins were tiny until this last cycle. Bitcoin was fairly small until the last 2 cycles. And until it gets kind of bigger, less volatile, just more liquid overall, more awareness, more comfort with how it works, it's kind of limited at the current time. But the more Bitcoin communities pop up, the more people use stable coins, whatever's working for them, whatever the market forces kind of end up wanting. There's pros and cons to both, obviously. That just starts cracking this artificial framework we've had for the past century and a half, really. I don't think that the market understands that how big that can be yet. It can change macro, it can change money. It has huge implications. As long as just a couple of things are true, as long as the Bitcoin network remains decentralized, secure, and as long as its overall adoption and liquidity keeps improving because it is solving a problem, And if that happens, then that I think just increasingly chips away at these currency bubbles we have.
Robert Kiyosaki said he continues to move his fiat assets into Bitcoin and precious metals because leaders don't care about you, and their actions boil down to war and poverty. On October 20, Kiyosaki predicted that the gold price would soon reach $2,100, and he expects the price to rally to $3,700 in the near future. In August 2023, Kiyosaki predicted that Bitcoin would reach $100,000, considering the geopolitical issues threatening global prosperity. Lyn Alden acknowledges that for Bitcoin to realize its full potential, certain conditions must be met, such as maintaining decentralization and security of the Bitcoin network and increasing its adoption and liquidity. She further goes ahead to share the various problems that Bitcoin solves as the best form of money. Let's now listen to Alden.
The one that it solves, I think, most universally is the store value problem. Because wherever you go in the world, people are monetizing other things because they don't want to hold just money. Especially in this kind of last 15 years of zero interest rate policy. So they say, okay, well, I want to buy this really expensive real estate instead. I want to buy this really expensive equities instead. And of course, there are places for all of those. I mean, I have real estate and I have equities. But it's like in Egypt, for example, people will buy another home and it's just sitting there empty because they're like, well, I'm not going to like invest in the local stock exchange because it's not as reliable as like the US market. And I'm not going to hold cash or bonds. So I guess it's real estate. It's either real estate, gold coins, or physical cash dollars they got in the gray market. That's kind of that's like their options. And so and in the United States, we just shovel money into our 401ks and just monetize the S&P 500.
Yeah.
And that has some distortion effects on business formation and things like that. And in some countries, it's a lot of you get real estate bubbles because of that. People say, well, I want to hold something that's outside of this jurisdiction, or I want to hold that, and you kind of drive up certain prices beyond what they should be in a healthier environment. And those are just kind of they distort things. And then the other problem that Bitcoin solves for some people that those of us in the West generally are less aware of is the payments issue. So, for example, there's something like 40 currencies in Africa. There's like 30 currencies in Latin America. And it can be non-trivial, for example, to send money from Nigeria to Kenya, right? Or the cost to do so end up being just non-trivial. And that should be it's 2023. That should be trivial. And the interesting thing about things like Bitcoin is that it just can bridge that gap. So like apps can work with each other as long as they have internet connection and just have this kind of shared open source way of communicating with each other in a way that's not really working for a lot of people right now. So, those of us in the United States or Canada or Europe, we generally don't have that many payment frictions on a regular basis. Sometimes if we send an international wire, we'll be reminded how antiquated some of this is. But other than that, we generally don't go around every day thinking, like if only I had better payments. Only around the margins do we see it. But in a lot of countries, it's non-trivial. And then especially when you do think of this global scale, when you think of global remittances, when you think of like apps and money systems being able to communicate with each other across borders, I think all of that can get way better. And I think a really good analogy is email. So like every like webmail client can talk to other webmail clients because they're using the same open source underlying protocols. They don't have to like Yahoo and Gmail don't have to get together and make sure that their systems are compatible. They just have to make sure that their systems are compatible with the underlying open source. And so when you have open source, Bitcoin base layer, Lightning, whatever other layers could exist, any entity that starts interfacing with those systems now starts interfacing with every other kind of environments, money ecosystem in the world that is also tied into that system. And so, for example, Cash App has got a very large, set of users, and by incorporating into the Bitcoin and Lightning network, they start connecting to, other ecosystems around the world without even necessarily knowing it. Now, there still can be frictions on that in terms of like KYC, AML, and kind of these artificial restrictions that start going on top of that. But the point is, I think that basically having these open source layers that can connect different monetary ecosystems together and bypass their artificial kind of firewalls, I think changes a lot, and mostly for the better.
Bitcoin's hash rate has hit a new all-time high. indicating that the network is stronger than ever, just in time for next year's highly anticipated halving. The total Bitcoin hash rate hit 491 exahashes per second Wednesday, according to data from blockchain.com. This means that every second, mining machines around the world securing the Bitcoin network are making 491 quintillion hash computations. The hash rate refers to the amount of computing power used per second. The more computing power used, the more difficult it is for attackers to take control of more than 50% of the Bitcoin network. It also means there is more mining activity on the network as miners expand their operations and use more machines to continue to make as much profit as possible. Hash computations, or hashing, is the process of turning data into a fixed-length string of characters. It is needed to do things on the Bitcoin network like create private keys so users can make transactions. A higher hash rate means that it is difficult for attackers to take over the network because the malicious attacker would need to get enough mining power from machines to match the current hash rate and disrupt it. This would be a costly and energy-consuming process, and a higher hash rate means that more energy is needed, which in turn means more powerful mining hardware. This could result in higher costs for miners and more energy consumption, something Bitcoin has been frequently criticized for in the past. But ahead of next year's halving, an event where the amount of Bitcoin awarded to miners is halved every 4 years, miners are buying more efficient machines, sending the hash rate up. The upcoming Bitcoin halving, the fourth of its kind since the cryptocurrency network launched in 2008, is expected to happen in April and is broadly viewed as a bullish indicator for the market. This is because the halving of rewards baked into the Bitcoin protocol is designed to keep Bitcoin inflation in check. Every 4 years, the issuance of new Bitcoin is halved, reducing the supply of Bitcoin that miners can unload onto the market, and if history is any indication, increasing demand for the existing Bitcoin that is available on the market. Bitcoin has a fixed supply of 21 million coins, and there are currently just over 19.5 million coins in circulation. What do you think of Robert Kiyosaki and Lyn Alden's cry for investment into Bitcoin? Let us know what you think in the comment section below. Don't forget to give us a like, subscribe, and turn on notifications.